Today we have with us Ankit Mehta, Director of Strategy, M&A and Ventures at Quest Diagnostics and graduate from Stern School of Business. Is there anything you'd like to add or tell us about yourself?
Hey, Navan, thanks for having me on your podcast. Yeah, just like to add that from the background perspective, I currently am at Quest driving M&A, venture investing, and inorganic growth. But prior to Quest, I had master's in bioengineering and 10 to 12 years in as a scientist in largest medical device companies in the world before transitioning to a role like this.
Awesome. So, anyways, our first segment is about your career transition. So, could you walk us through your pivot from investment banking to venture capital?
Absolutely. So, and that's an interesting question. I think I'll try to expand on the nature of the question.
Yeah.
Prior to investment banking, I was a scientist in medical devices. And the reason that I bring it up is it's extremely important to have domain knowledge, technology and science,
Yeah.
how that is crucial for one to be successful in the space when you are transacting deals in worth millions or billions of dollars.
Hmm.
Having a foundational and fundamental knowledge on how these technologies work is extremely important. Um, so having said that, before getting into investment banking, I spend a lot of time learning a lot about new technologies and how their application is in the real world. While I was doing that is when I understood the concept of investment banking, where you are trying to grow a business, sell a business or an asset. And for that to happen, one of the key diligence criteria is to understand what the business is and from the technology perspective. So having that technology background was a differentiator
Yeah.
when I was doing investment banking.
So basically,
Um,
specializing in a particular field, like the field that you want to go into. For example, you did biotech, so having technology and
mhm.
science knowledge really benefited you. So that's what you're trying to say, right? Like someone should go
That's
into that
correct.
field.
Yes, having that
Hmm.
domain or market experience that basically allows you to connect with different companies and players in the
Yeah.
space. I can talk the language with these different partners so that I can better understand the business
Yeah.
and
Yeah.
work closely with them.
Awesome. So
And so I think the question was around switching from
yeah.
investment banking to venture investing, correct? So
Mhm.
it was something that I was not intentionally looking for, but it was more of a learning curve when I realized that in any business you can grow in two ways, organically or inorganically.
Mhm.
And in inorganic expansion, where you are basically trying to have a partnership, acquire a company, or invest in new technologies and companies, is where I realized that that was where I wanted to be using my
Mhm.
experiences and competencies to drive growth in a business. So when I learned more about it, it is different. Think it from like a buy side perspective, where you have a capital access that you want to deploy, which drives growth for your business in future years. That's what I do at Quest right now.
Yeah.
So, which is investment banking was more so focused on trying to accomplish the goal of a client. Either they want to sell a business, buy a business, do a partnership, etc., or raise capital. And then you do it for multiple clients over time and you are growing in that space. Here, I'm using very similar skills, but I'm growing a business, like one business.
Mhm.
So the value creates over time, accretes over time with that approach. And
Yeah.
I found that very meaningful for myself and my career.
So for someone like my age or someone I guess a bit older, someone who's just finished college,
Hmm.
if they want to do investment banking, maybe for 2 to 5 years, and then they want
Mm-hmm.
to like transition into venture capital. Like, is it something that can easily happen, or is it something like a steep learning curve, or something that's difficult to transition into?
It can happen.
Mm-hmm.
I wouldn't say it can happen easily. There are some considerations when you think about it. So even before we talk about venture creation, sorry, venture investing, I just want to be clear that there are multiple layers here. So there is a venture creation. So you start a company,
Yeah.
it's a venture, you're creating a venture. There is an accelerator model where a lot of companies come together and there's a, a set up a platform which is set up to help some of these early stage companies to get access to talent, get access to resources, to get access to
Mhm.
network. That's an accelerator model. So venture creation, accelerator model, and then there is
If you don't
growth
mind, if I
financing.
interject here. So, like in the
No, go ahead.
accelerator model, like does the company that sort of funds the other company or gives them resources, do they get like a part of the company? Do they get like a percentage ownership of the company? Do they get like a share of the profits? Like, what's the gain for them?
That is correct. What you just said, Nevan, is what it is.
Mhm.
It's, in other words, it is. So think of it as like one of the largest accelerators in the world, Y Combinator. And all similar accelerators have very similar model. They have an application process. So thousands or maybe tens of thousands of companies apply and basically pitching to
Mhm.
be a part of their cohort. What happens is that when, say, they have 2 or 5% acceptance rate, when they get into the cohort, the way it is structured is the the accelerator
Mhm.
will give you access to things that you would need to grow your company. And it can be anything. It can be talent, it can be some money they'll give you. Um,
Mhm.
it can be access to technology, it can be office space,
Yeah.
it can be partnership, access to network. All of these things that you would need as a company to grow is what they will provide you. In return, they will, you're right, they will want some percentage. It could be
Yeah.
6%, 10%, some percent of the company.
Wait, so how do these applications work? Like, what do you submit on your application? Is it like a one-on-one pitch, or is it some written statements or something like that?
It's generally, it kind of depends, different for different accelerators, but generally speaking, it's like, what's your idea?
Mm-hmm.
And what are you trying to solve for? And what's the best way to get that across? Generally, it's a like a very succinct, concise, precise PowerPoint. Here's the problem. Here's the solution. Here's the market. Here's our technology, and here's how we're gonna solve it. And then I think most importantly, I think all everybody wants to know how you're gonna scale it. You want to be able to solve a problem, which is a real problem, and it's everybody's problem.
Mm-hmm.
So that is a high level view of having your story or a narrative that kind of goes in that flow where you can communicate and demonstrate what the problem is and what the solution is and how you can
Yeah.
scale it. So that's how the applications are then looked at. And these are all seasoned entrepreneurs, seasoned VCs who are looking at these applications. They see thousands, if not tens of thousands of them a year. So they exactly know what they're looking for.
Yeah.
So that's the accelerator model. And then there is growth financing. Growth financing is essentially is where most corporate ventures come into play, and private equity is where you've shown your problem, your solution works. You have some clients, so you have commercial validation. Market has been using your product or service, but now you need to grow and you need growth financing. That's a slightly different segment. It's which has much lesser risk because you already shown it works. So the returns are also kind of contracted, but it's less risk. So I said three things: venture creation, which is early stage, angel funded. Then there's an accelerator model, and then there is growth financing. So coming back to your original question, sorry to digress here a little bit, but investment banking, can you transition from banking to venture investments? It depends where you are going. What banking does for you or someone like you at that young age is brings in discipline. So what does a banker do? The banker basically is trying to understand how is this business working? What is this business? And then they are going out and selling that business to different potential buyers.
Hmm.
For you to do that, you need to have a very, very strong understanding of how to build financial models, how to represent and articulate what a company is doing in the most simplistic way to potential buyers. And so that's one is by a financial model. Second is how you communicate what the company is doing, the product and the services, the market, etc. And the third component is due diligence. There's one thing that you, when you speak and understand from what the company is doing, but really understanding like whatever is that you're buying or selling is what it really is. The financial diligence, the technology diligence, the legal diligence, all that learning that you would get in investment banking will be extremely helpful and meaningful when you transition into these different venture careers.
Okay, understood. Now moving on to more of the biotech aspects of the things that you did. So, like, which
Mhm.
core principles from biotech are like applicable in strategy and investment decisions? And overall, how do they just help you? Like, how does your knowledge help you overall?
I think so from the biotech or call it the domain experience and expertise, the way it helps you is two parts. One is it differentiates you. Imagine you are a venture capital partner and now you're looking for talent. When you are looking at two different individuals, one who has experience with banking, he understands how the transactions are run, you do diligence, you structure deals, you negotiate them, all of that component. The other individual has all of that as well because you both have banking background or similar backgrounds. Now, if I, on top of it, have a domain experience, either I had a bachelor's or master's in bioengineering or biotech, that science competency or learning just differentiates me. And why does it do that? Because now, if I am talking to an early stage CEO, company CEO, he
Hmm.
doesn't have he doesn't have any real data, market data in terms of revenues or financial data. What he has is an idea. Now, how you, Navan, as an investor, are going to understand that that idea has value? Like, is it really solving a problem?
Hmm.
Like how would you understand that there are so have you having that background gives you a working knowledge. You may not really mean you may not be an expert, subject matter expert or a PhD, but even having to converse with founders, with CEOs, with chief scientific officers, being able to converse with them, asking meaningful questions is a big differentiator and probably even to the extent where it can enable success for you.
Doesn't it also add
Um,
credibility though? Like, if you know
mhm.
stuff about the person's business, if you understand how it works, you are understanding what it says, are they more likely to go with someone like that who really understands what their business is doing rather than someone who's good at investment banking? They can do the job, but they don't just understand what the officers or the managers are really trying to convey.
That is correct. It's that likability factor, right? People
Mm.
who think
Yeah.
alike want to work together. It's not think alike, but think similar.
Mm.
Absolutely,
Yeah.
yes. It does open up more doors and ability to work together.
Okay, awesome.